Thank you, Angel, and Heidi ho, everyone. It's happy hump day to you. How you doing? I'm well, having a very warm hump day here in Tasmania. Wish it would rain. That would be nice. Hope it's nice where you are and you're enjoying your hump day to date, and we can hopefully make it just that little bit better from a financial point of view. Not that keen, I've got to say. It is the last day of the month. There is a new month tomorrow, but that new month also represents the day before Easter, or Easter Eve, if you like. That kind of makes it just a little bit different. I'm not averse to trading, but I will be very, very cautious based on, well, I'm not sure what's going to happen, to be fair. I think, hi, Paul P. I think there is a case for suggesting that the end of the month and the fact that we've got a holiday on Friday, and we've also got a holiday in the UK on Monday as far as banking is concerned, and therefore trading for me, it may well be worth not considering entering the market with anything new unless I can get to be free trading in the market. That would be good. And of course, that's what we hope to do. Let's go and have a look at the potential for breakout today. And it's a little bit mixed. I've got to be frank. What we're trying to do now is add a filter to the breakout trade, and that filter is based on whether we are in a range or whether we are not in a range when we actually take the trade, which of course is at London Open. Just having a little fiddle here with some levels to see exactly what we've got, and to my mind, that's probably the market structure that is secondary in my head. The one that's primary in my head is this one: double bottom, big higher low, big higher high, big higher low. That's not necessarily on a 1 hour chart, of course. And then you get into a 4 hour chart, which suggests to you that, yes, we've had that big higher high, but we're also getting now a series of lower lows, lower highs, lower lows, potential lower high coming into that resistance area. So it's not an easy quest to say that we're in a range here. And that's where it becomes a little bit subjective, and we're trying to eliminate that so that we don't have to be subjective going into this. It's either, okay, yes, we do trade it, or no, we don't. And right now, it is not that clear, because we've now put in a higher, a higher low, and now potentially a higher high based on here. This, of course, is now a breakout of the area that we probably would have considered to be a range anyway, with 2 minutes to go, or 1 minute and 40 seconds to go in this particular scenario, in this candle rather, and before the UK Open. So it's kind of question mark for me. I'm going to say that we have to really cement this rule in before I implement it, I suppose. And for that reason, I guess we need to trade this today. Because we have come off the bottom. Okay, we'll trade it. I'll give, well, it's going to be exactly the same bar, right? These are all inside bars based on going backwards. So the high and the low of this bar will be the range. So the high entry, or the long entry, will be 1.3754. That'll be our buy. 1.3754. If we close above here, guys, that range again is broken, so I won't place this order. But at the moment, that is the order, the potential order, I should say. And the stop loss would be, why does it change? Gosh, does that annoy me? 1.3715 would be the stop loss. And of course, we could reverse that for the short given that it's a single bar. Okay, we'll place that order. We'll place the long first. Again, this is questionable as far as what it will do in the future, but in the meantime, this is micro lots again, guys. 1.3754. And looks like I'm going to miss the entry, but I'll put it there anyway. We may get it, we may not. No, we may not. I'm too slow. Okay, if we do get a retrace beyond the low of that bar, I will replace it. Otherwise, I won't. And sure, it's not very appealing anyway, is it? I'll just wait and see if we get a retracement back beyond the low of the current bar. In other words, down to here. If we do, I'll place the order. If not, I won't, because price action will then be very, very iffy for me. Again, going back, those of you joining us for the just now, welcome aboard. Number one, happy hump day to you. And I was saying earlier that I'm a little bit iffy about today. It's I think John was saying yesterday he was asking how do we think the end of month will affect the market, and I'm kind of the opinion that we're in a dual situation, because it's end of month. Yes, today is end of month. Okay, now I'll place that order. What was it? 50 stop loss. 137.15, right. We've got a dual situation where we've end of month today and, of course, a new month tomorrow, but the new month tomorrow is very, very brief because of Easter, because there'll be no trading on Friday, or at least to the best of my knowledge, there won't. There shouldn't be if there is. So it's kind of, you've got to be thinking that there won't be too many people at work. Hi, John. There won't be too many people at work in terms of trading desks on Thursday morning, which of course is tomorrow, and bang on right now, as a matter of fact. So I'm kind of, best way to judge that is probably to watch your volume indicators. Not that I ever do. I wouldn't even know how to put one on here, but that's kind of my opinion. Just take it easy. If you're in trades coming into tomorrow afternoon, then hi Hanan, you'll probably want to be looking at getting them safe if you're not safe already. You might even consider closing them, because the market's going to be closed for 3 days. Hi, Angel. Can you remind me again, the viewer don't have show on? Yes, I will. Absolutely. So again, yes, that's a good point, Angel. Let's do that now. There will be no show on Monday of next week, that being Easter Monday, and of course the markets in the UK will be closed. So this is potentially going to be extremely boring, and hopefully it is not today. Let's see how it pans out. So that's the long of it. TP1 on the long, let's set that. The risk is 39 pips, so we'll go with 19. So we'll go with 19 as our TP1, which will bring us in at 1.3773, which is around about there somewhere. That'll do. And that's not in a bad spot, is it? Providing we can get through that little area. And TP2 will be double the risk. 39 becomes 78. That becomes 1.3832, which is about there somewhere. Okay, the short, should we place it? Might as well. Who knows? It might just crash. G'day, Lewis. How you doing, buddy? 1.3715. and 1.3754. TP1, again, 19 pips will be 1.3696. Whoop. 696, and TP2 will be 78 pips off, what's the entry? 1.3715. Have I got that right? Yeah, I have. 38 pips off 3715 would be 77, 1.3677. Okay. So let's amend those to stop loss. Take profit 1.3696, which is there, and TP2 will be off our charts. God, we've got them everywhere, haven't we? Let's get rid of that. 1.3677. Doesn't look right. Have I made a mistake? I think I have. Don't look right. Maybe it is. No, something's wrong. Okay. TP1, 1.3715. That's where I'm going wrong here. 39 pips. So first take profit is 19. That's correct. Second take profit is 38. 38 from there is 3677. That's right. I must have something wrong up here. 1.3773 is correct. And TP2, let me get that right. 3773. TP2 should be 38 pips, and I've got it at 368 pips or something like that by the look of it. 38 onto there would be 92, right? 3792. How hard can it be? Righto, let's bring it down. 3792. There-ish. Bingo. Does that look better? That looks better. Okay. So that is it for those or that particular situation. Look, it's a bit iffy, I've got to say. Are we ranging? Are we not? And we've got to work out Ash. G'day, Ash. How you doing, bud?
Hey, very good, mate. Yes, not too bad. What are we going to work out?
We've got to work out a non-discriminate or a non-subjective method of saying we're in a range or not.
Yes.
Because you could argue here that we've come back into the range because we've now put in a higher high and a higher low, whereas before we were getting lower highs and lower lows. So, yeah, it's a little bit iffy, isn't it, really? And we can't have it like that. It has to be.
No,
it has to be definitive.
I agree. I mean, I think what we were talking about is taking the price action from the last 2 days. So that, as you say, would suggest actually we're probably in an uptrend now, and we're probably not in a range. And you know that the last 2 days we didn't see a block of price action which tips the top, tips the bottom, tips the top, tips the bottom at any point.
Is that what we said?
Yes.
Did we do this late at night?
For you.
Right. Okay. Maybe that's why I can't remember.
You probably need the spreadsheet because the rules are on there. So
that's rules. Rules are good.
Okay. Yeah. We'll I'll send it over. But good morning, Lewis. Did I get a bit more sleep? Not really. No, not really. But well, in fact, I did get more sleep because I didn't wake up at 3. But I still got a visit in the middle of the night, but I feel okay. I don't feel too badly. And actually, you know what? I opened things up this morning a little bit late. And this is the thing about trading. You guys on the other side of the world are in a much better position to trade the UK market in some respects than I am.
Yeah, not many respects, I've got to say. But yeah,
not many. Oh, yes. It's just that, I mean, but, you know, when I'm talking about UK market, I'm talking about the UK stocks. But if you're going to trade UK stocks, you've got to be up and alive by 7 a.m. No two ways about it, because you've got to get through the all the feeds of the news, all the stocks that have breaking news about them, any statements and financial statement releases. So you've got to be in front of the charts. So you've got to be in front of the news by 7, because that's when they all really start rolling in. And that means you've really got to be up by 6:30 latest, and that will include getting yourself out of bed, going to get a drink of some sort, maybe kind of going for a walk. I don't know what everybody's process is. But if I wake up any later than that, then I'm less likely to put my money in the market. And today I wasn't in front of the charts until 7:30. But when I did open up the RNS, there wasn't really anything that I was hugely interested in anyway. So actually, it's been a benefit for me today. But you've got to make sure your brain's awake for this stuff, because there are people out there that, they've sharpened their teeth and they're ready to go. So you're against them ultimately, and there's no point in just kind of wandering in half baked. You got to be in the right frame of mind.
You don't mind the end of the month, do you? It's of course there. And John was asking the question yesterday, what effect do we think that will have? And of course, It's not just the end of the month. It's Easter on Friday as well. So,
and it's the end of the quarter.
And it's the end of the quarter. There's all sorts of things going on in terms of books being closed and positions being closed and not opened and all the rest of it. So it becomes kind of, is this the last chance you have to get in the market and free trading before the weekend, or is it now time to consider getting out of positions or otherwise?
Well, that's a good question. I'm not sure what I'd want to get out of positions unless I was very, very close to where I entered. If I'd still had positions that were going on longer term, and I was far enough away from entry, I'd leave things as they are.
Can you just hang on a sec, mate? I was just wondering why I've got my buy order up here. I think I've made a mistake there as well.
Oh, there you go.
Okay.
End of the month syndrome.
Hell, that's a heck of a stop loss I've got there also. I think I must be 3854 or something. Yeah, I am. When I should be 3754. Is that right? How the hell did I get there? Won't let me now. And it won't let me modify it. No, won't let me.
Are you in?
Anyway, no, not.
Oh, okay, so you can delete it and just do it again.
No, I can't, because it still won't let me in because it's right on the price.
So it won't let you close the order?
Well, it won't let me open that 54. It's the same thing. Won't let me modify it.
Oh, I see what you mean. I see what you mean. Yeah. Yeah, but you know what? The other thing is, mate, that it's no hard and fast rule for me, whether it's the end of the month, end of the quarter, or a little bank holiday coming up. It's really about what's the terrain on the day as well, and what's the terrain on the week. That's the first thing that's important to me. But because we don't really have any rolling news that would encourage me to get into the market, I would anticipate a very, very quiet session. And so far it's been that way. And I wouldn't want to get into a position, because you've effectively got 4 days in the UK where things could change, over the weekend, and you've also got Friday, you've also got Monday as well, where things can change. So if I did get into anything, I'd want it to be fairly fast. I'd want to just take a position, probably just for the day, if I was initiating a trade sort of from here, and maybe sort of moving some stops up, because things can happen over the weekend. And as you say, there are options expiry and futures contracts and things like that going on as well. So it does make it a bit trickier. And the market's very quiet so far. The FTSE 100's been, I guess, grinding its way higher over the course of the last few days, without really doing anything, without really taking off. We saw oil. We looked at oil yesterday. I don't know if you want to. Shall I have a quick look around at some charts here?
Yeah, I don't think I need to do too much. I was going to update the trades that we took yesterday, but that can wait. There's nothing urgent there, because if you're not in them, you're not in them. It's as simple as that. So yeah. No drama, mate.
Okay. And it was a bit of a turnaround as well because what we've been seeing is we've been seeing that bond yield kind of cruise higher, and we've seen the dollar cruise higher as well, and that's what we've had with the dollar for the last few days, last few sessions, a dollar which has been cruising higher, and it came off its level up here. Now, if we bring up the daily, in fact, let's bring up the weekly. The most obvious point now with the dollar, or the next most obvious point price wise, is the $94, and we're currently at
Yep.
93.20 ish. And that would suggest, and you can see the pattern here. There's a left shoulder there that looks like we're going to be making a head here in a neckline, and then possibly coming back down again would be something that would be attractive to people. But the dollar is just coming off a little bit, and I suppose there's going to be a little bit of resistance in these kind of areas, and it's not a great surprise after a good run that the dollar would come back a little bit. But this is probably a time thing rather than anything sufficient. The yields have come off a little bit, and that did really kind of like show gold. And look what's been happening here with gold. Gold is having a hold here, but when we look at the bigger picture with gold, it's still got some room to travel. I think 1550 is the area that gold starts to get really interesting again, but it's still $100 away, $100 plus actually away from that particular point. And I wouldn't really be that interested in here at this stage because the monthly just looks like it's broken down once here. Anything that does show some upside could just come back up to this point and then come down again. Gold has got a seasonally bearish period coming up as well. That's another aspect of this. We don't really start to hit a bullish period really with gold until the summer. Now, I'm not interested in the shorts of gold. I mean, I'm not saying that it isn't a short because I'll be looking for this point here, but I'm buying gold and I'm buying it all the way down. But my point is that I'm not buying in this zone here. I'm waiting for the next one because I'm kind of already in this zone. I've already bought some in this area, and I want to wait for the next decent zone before I start accumulating some more again. So in here, I'm interested at 1552, and if we look at silver as well, it kind of agrees
Before
with
you
that.
go there,
Yeah.
Ainsley can't be with us today because she's got NBN, which means National Broadband Network issues.
Okay.
But she did leave me a little snippet of her analysis if you're interested before we go off that chart.
Yeah, let's do that, mate. Yeah, that'd be good.
She says gold is at a crucial level. Expect it to bounce from this level as it has hit support, but the open interest is low. Open. By open, does she mean open of London session? Because it hadn't opened.
The open interest?
What's that mean?
The open interest is the COT report, so the contracts that are currently open.
Aha, gotcha.
Yeah. Okay. So it doesn't have sort of too much conviction. And we could look at we'll look at the COT data with this, and I'll show you the COT and the seasonality, because actually this is where the picture with gold does get a bit more interesting in some respects, and it might well keep people out of trouble, because there's no question that gold could start to push to the upside. But when we think about what's been driving gold down, it's very much been about the dollar, and it's very much been about those yields, and the dollar looks to be on a bit of a move, and even though we could get some downside with the dollar today, I don't think it's going to last very long. And we still have that 94 to kind of hit, if you like. And it almost becomes, when you see a price point like that without any fundamental reason for it to turn around, it becomes a bit of an elephant in the room until it gets hit. It kind of, it's one of those things that you just have to be patient with. And this is where the patience comes into it. And this is where, it's a difficult one, isn't it? When you're kind of waiting on stuff. I waited on the cryptocurrency stock that I was telling you about, and I was waiting for a specific price, and it meant that I ignored a slightly higher price when it did retrace. It meant that I ignored that particular price, and I've missed an opportunity because it's up 20%. And so it does become a difficult one, and I think I'd be more comfortable with gold holding because I'm already in. So maybe I should have got into that stock in some reduced manner to start with. But let's have a look at the COT data.
Well, hang on. Just to get Ainsley's comment out of the way, looking for commercials to get on board as it is relatively cheap, but that aside, the dollar and the treasury bond yields have not flattened out. She's looking for a higher low before considering, and says it has been a tough run on gold for the time being.
Yes.
So there you go.
Yeah. I think
to your points.
Yeah, and I think it's probably, it's frustrating times, isn't it, for gold? And I suppose when it comes down to it, this is where you just have to wait. It will get there in the end. And what I like about gold is that in some respects, people are starting to discard it. And that's when things become a lot more interesting for me. I much prefer when people are discarding the item that I'm interested in, rather than everybody's kind of jumping on board, because not only does it make the price more expensive, but it also makes the pattern harder to kind of justify getting involved. It's kind of. There's a caveat to that, and the caveat is, with strong momentum, you still should get involved. But when things are drifting, it becomes very, very difficult. And I'll show you that in a moment with Bitcoin. So with the commercial data, and we don't have the the open interest stated here, but you can see that these are the short sellers, and the shorts are coming out of the market a little bit. The selling pressure is coming out of the market, but look at the buying pressure. It's not really doing that much. It's not that exciting. It's these areas here, when the index is up here and you see the buying actually pretty much even with the selling. And the reason that's important and a really good signal is that we're talking about the commercial players here in the market. We're talking about the people that their job is to sell gold. Their job is to offload their products, and so when the sell and the buy are pretty much in the same position, that suggests that either then certainly here they weren't selling. They were keeping hold of their position. They're keeping hold of their gold. But look how flat the buy level tends to be. So it was really more about, you're reading much more into the sell than you are anything else. Now the question is, are they continuing to sell it, or are they selling less of it because they are looking for higher prices at a later date, and they're not making the margins that they want to make, so they starting to reduce the amount of gold going into the market. And it looks like that with the contracts, it's all about futures contracts. The contracts are starting to diminish somewhat here, and there is a little bit of buying as well. But we're looking really for this sell line to come down, and it would need to come down to around about this one was 148, and we're currently at 300 and something, so we're around about double that. But by the end of this week, we'll get a new read on this. This stays here for the week, so we'll get a new read. We'll get a new read on this, and we'll see what happens. But the index is just drifting up. It's not very aggressive, but it is just drifting up. So it needs to go a little bit higher. I want to see it around about 80 before I start saying, okay, we're kind of looking a bit more bullish here, and we're not even at 50 yet. So it does suggest that there's a little bit further to come down with gold. And if we look at silver as well, what we're seeing with silver is something very, very similar. And the reason there's a reason that I think that looking at the gold and silver charts in harmony is actually quite useful. You can see again the selling is just coming off a little bit, but it's just not significant. And the buying did come out of silver, just starting to tip up a little bit there as well. So this is why I think it's quite useful to kind of look at both of them, because if you then look at where gold is and where silver is, and we mark off the level here, is gold, looking at this monthly chart, in a nice, tidy, clean buy area? And I would argue no. And I would also argue that this is the start of that nice, clean, tidy buy area. Certainly, this is the clean, tidy buy area, if you like. Close it. Didn't close below. reacted here. Looks like it just tipped up there. It tried it here. This is the nice, clean, tidy area. Now we're at 1686. Now that brings us down to 1558. So you're looking at around about $1,026. Sorry, $126 to the downside. So $126. Let's call that, because I can't do the maths quick enough, but let's call it around about 8%, 7 or 8% drop before we get to the really interesting area. Now, when I look at silver, very similar. I'm going to mark this level off here, and I'm going to say the same thing. The level's not that clean. Okay, we do have a point back here, but when we bring in this area down here, it's starting to look a bit more attractive to my mind. It might not be right there, but it's getting there. Now, silver's at 24. So for this one to come down, a similar amount, so another 8%, that's going to be what? That makes it around about $2-ish, just under. And that's going to bring us here. Oops. That brings us here. Now there were, and I'd say this is within that margin of error. This area here it becomes in a margin of error. So another 6 to 8%, 5 to 8%, somewhere around about that. So until silver drops down to around about 22 and gold drops to around about 1550, then I am not going to put any more orders into either of them. I'm just going to wait. And if it picks up, then I'm okay, because I've got positions in the market. But until it does pick up, then I'm not that interested. Would I do a fib on gold? Yeah, that's a really good idea, actually, Lewis. I think a fib on both of them would be a good idea. Now that does leave us in a little bit of no man's land. The 50% retracement down to $21 looks better with silver. But we are then starting to look at north of 10%. And with gold, and of course it will depend on where. Oh, I mean, it's quite interesting, isn't it? Gold's right on my fib. Around about this 1550, 1570, gold's right on the fib. So, yeah, gold, it suggests here that gold, coming down between 6 and 8% would be a great area to start buying things up again. Now finally, I'll tell you what we didn't check. Finally, let's look at the seasonal aspect of this. And the seasonal aspect of gold. This is the area that we're in, and it kind of suggests that we're, a little bit of sideways price action here. Okay, a little tip up in April, but the same sort of thing. Another dip down again. If we're looking at the weighted average, but if you look at the historical prices between 1975 and 2020, then what we're really seeing is some sideways price action. Another dip down in around about mid-June, and then it starts to really take off. So any time between April and mid-June, if price is elevated, it's not as attractive. That's the way I would read this. But anywhere, you don't use the low on August to 20. Let me have a look. Oh yeah, well, you on gold? Yes, you could, absolutely, Lewis. And this is, it's always a question, isn't it, with the fibs? Let me see what you mean by that. August there, yeah. Let's change the color of this one just so we can see it properly. It's not quite as clean, is it? I mean, it's we're through that fib. That starts at 1624, which again, the price action, and I guess it's one of those things that because the first one agrees with the analysis of the price point that I like, then I'm going to use the first one and say that's the best fib. But the truth is, I don't think that that's not necessarily the best fib. It's not. Where would you draw the fib from? And we could really get into all-time highs, all-time lows, the year high, year low, and if we were looking at the yearly. The yearly would be, let's go from, well, there's so many things here. There's the bottom end of 2019. So that's 2020. So last year's fib. There's the high. This one would be a genuine fib as well. I mean, but when we start looking at this in context, what's happening here is that gold is retracing a high percentage of last year's rally. We're already through 50% of the upside from last year's rally, and if we consider how people interact with the market, they're going to be getting pretty worried here if they bought the start of 2020. And now it's coming, it's retracing quite as aggressively as it is, or it's retracing as much as it is. Those positions here, I mean, inevitably there's going to be some profit taking, and what's interesting is that
subtle warning, overt warning.
What, on gold?
Perhaps.
Yeah. Well, do you know what's interesting, mate? Is that if we think about time frame correlation as well. This is, I mean, this whole area is, it was a hold area, but this was the end of 2019 right here. And if we think about these things holding over for a year, this is the first of the 2021. So it was still, if we didn't have this price action here, and we were just looking at the gold chart to there, you'd say that was okay, right? But then the very next,
you would say that's perfect, because if you look at the previous high, the previous highest high, which is pretty much just not far from the middle of your chart, where you got that bearish engulfing. There's your subtle warning right there. And then you got the overt warning straight after that. Then you went down into the lowest low. Then you matched the breakout area. Wow, if that's not a sentiment cycle, I'm not here.
Yeah.
And then finally you got the aversion point.
Yeah.
The problem with that chart is the aversion point may well have been the higher low before the aversion point, if you understand what I'm saying. It wouldn't have done you any harm if you kept your stops there, but that looks classic to me.
Yeah.
Are we going to see the same thing again?
But I bet you wish you trade gold now, don't you, Jeff?
Well, isn't it clear when you can look back?
Yeah, cool. Of course. When you put all the information on and take it all into account. But this is suggesting, and if we're thinking about this high here, it does kind of point to this area, doesn't it? Because this was, if you like, the kind of last range. And all it's kind of done is, apart from this false breakout, it looks like it's getting back to that kind of that range area at the top end of the gold market there.
Sorry, I probably should. There are a few people in the room today who may not be aware of the sentiment cycle. So, guys, Google sentiment cycle. Just Google it, and you'll come up with a whole heap of charts there.
Yeah, the sentiment cycle is brilliant, and it works on everything as well. So I think anyway, either way, this particular message has long gone in its past. But either way, the more I look to this, to what's down here, the more I like it. We're talking about a monthly chart here. Now, when it comes down to the fib, I think we could probably make the point for either one. I'm going to use the lowest point of the run to the highest point of the run for two reasons. Firstly, it's the cleanest. rather than trying to pick points midway up. So I think that it's the cleanest one to kind of get the very, very low to the very, very high. And secondly, because it backs up my argument. so I'm going to use it. Yeah, I'm going to use it. But make no mistake, that's that's probably the main reason that I am using it. Because it just kind of backs up what price point that I would quite like, and it backs up the price point that I would quite like because of genuine objective levels. This is an objective level. This can't be argued. Very subjective when it comes down to the fib, but when it comes down to this price point here, that's an objective level. We've had a touch, 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 and we've had a touch. So this 1550 to me is screaming. We've now got this trend line as well that's been drawn in. And yes, you could start to sort of like say the trend line's down here. And I will say the trend line's down there if it breaks this point. And I'll like this area down here too, because it's the 61.8% retracement, and it's also near. Looks like it's near some price points down here as well. So I'll also like it at 1450, and I'll also like it at 1350. So for me, I think 1650 is out the way. I want to buy really at every $100 down. 1650 I'm going to ignore, but I'm definitely going to start getting interested in the 1550 area, and I'm definitely going to get interested in the 1550 to 1600. I'm okay with that. So the projected low is getting lower and lower. No, it's not that I would project it getting low. I would say that if it broke that level, then I'm still okay to buy gold. That's my point, really. And I'll pick another level lower, and the next level lower would be here. If we're talking about projected low, if you were talking about how would you actually get a measured move on this? Well, we'd have to find the pattern first, and then see if we could find where the measured move would be. Well, what we got really, I suppose. I mean, it's a channel, isn't it? It's a pretty good channel on gold, so that makes it difficult. Even though where this would be really good, when it comes down to this, is that if you start to see gold, and it's at the lower end of the channel, and maybe this is another reason that this can bounce here, but it can drag all the way down here. It'll still be in the channel at 1558 as long as it doesn't break down here. But where this would start getting interesting is when it breaks, through one way or the other. Then you'll have the measured move. But let's see if there's any pattern we could get a measured move from. Yeah, maybe. It's quite it's quite tricky, actually. That leads you down to 1650. I don't think. I mean, this was the topping pattern, if you like. But this one looks like it's already played out. Yeah, so we're already through there. Let's see what the pattern is here, if there is one. Let's see what that does. Okay, it's down to 14. I mean, I don't love that. I don't think that's that clean, but it's kind of the best I've got.
Yeah, I think
Oh,
it's a channel rather than a rectangle, mate, isn't it?
I think it is. Yeah. I mean, I think
I mean,
you'd
that's a
want.
triangle. Sorry, the rectangle's got four sides.
Yeah, the thing. My question is it really a triangle? Because I would have preferred the low to be made a lot earlier.
Yeah, I agree.
In the pattern and really, okay, yeah, this one is relevant because it's gone from low to high, but this one is just a hold from a double bottom and it's gone right through. So I don't even like that very much. I'm finding it difficult to get the measure move. It looked interesting. You like it a lot lower, do you, Lewis? You like it down at 14. I mean, you might be right, mate. You might be right. And the thing is, it's if you believe in gold in the long run, which I do, then any price that comes down, I'm getting quite excited about. But what I won't do is leverage up on it. What I'm trying to do with gold is buy a chunk of it when I've got some cash. You know. Oh, mate, that's brilliant. That's brilliant. And I mean, regardless of where your projection is versus my projection, it doesn't appear or it doesn't suggest at this stage that it's going anywhere but south for a while. And nothing has changed really. The terrain hasn't changed when it comes down to gold, in my opinion. It still looks pretty bearish. And this is the other aspect of this, and we can't discard this either. If I pick out this level here at 1550 and you pick out a level at 1450, then regardless of what the charts are doing down here, if the same reason exists for gold coming to this point, are still in the market, the likelihood that it comes down to at least the next level to test are pretty high. So what I'd be looking for down here is a change in sentiment somewhere. The seasonality would be starting to play a part. The COT data would be starting to play a part. You probably wouldn't want to be holding on to shorting your gold position at 1550 if you saw the COT index at 100 and the sellers just just collapsing, and you saw that we were in a seasonal bias long. I wouldn't have thought anyway. I mean, I certainly wouldn't. And that would be enough to get people really interested in going long gold. So my suggestion, if you've got some gold shorts in the market, is use it to your advantage by picking out your price points to go long and taking the risk off that trade. Because leave your shorts in the market. When you get your long in the market at 1550 or 1450, don't worry too much about the chart pattern. Just pick an extreme and see if you can pick a low. And when it starts to bounce up and give you the higher low, close your short positions, take all the profit on that, make your long position safe, and you've just managed to kind of like get yourself a complete freebie. You could make money on the way down here and on the way back up again, or you could make money on the way down here, or make not quite as much money on the way down here, and have a long put in the market and stopped out completely for free. So if the idea of trading is to make your account safe first, you've got a really good opportunity to get a trade going here that reverses what you're thinking. So I would really look into picking out your price point and sticking with it. Just be still trade the short as you would trailing or whatever that is that you're doing, but sticking to a price point, putting a limit order in, and just ignoring it, and allowing the market to take you in and get yourself a freebie, because that sell is it's gold in itself. To have a sell position, and I think you were in quite high, to have a sell position when the market is coming down. If you're bullish on it, of course, if you're not, then that completely negates that methodology. But if you're bullish on it ultimately, then you can really utilize that to your advantage. Okay, Matt. Well, I'm going to pass it back to you, mate, because you haven't been through your charts, and I know you've been waiting to do that. Bitcoin is the last thing I wanted to mention, mate, and it just continues to ease to the upside, and this is what I'm talking about. Bitcoin, very, very difficult for me to make a justification of buying because momentum is weakening here. So on this kind of thing, the pop to the upside, here is, there's some real momentum there. So yes, you'd want to take that. This big momentum bar here, still, it's a breakout. You don't get the pullback, but that's a relevant breakout to take. This to me is just getting a bit messy, and I still wonder whether there might be something of a reversal pattern possibly forming here. I think Shukri seemed to kind of like dispel that yesterday. We would have to do that. But I'm still not really too keen to buy Bitcoin at too higher prices because everybody else is. So I'm sticking out of the way, mate, right now. But you can't argue with the price action currently, that's for sure.
Well, that's if you're taking any notice of it. And I'm
not. Fair enough. Okay, well, let me pass to you, mate, and you can do your thing.
Cheers, mate. Let's have a look and see what we did yesterday before we get into today. And really, there's not a lot to be excited about today. But yesterday, we placed 3 orders in this session. Oh, sorry, actually, we didn't. We placed 2 orders in this session, and I gave you here's what to do if this happens. And we'll start with that, actually.
I'll be back in a shake, mate.
Cheers, mate. So we're talking about US dollar, Canadian dollar yesterday. And I left you with, if this bar here is decisive and bearish and closes in this vicinity here, then you need to place a long order above that bar and a stop loss below it. And what I didn't say to you was get out at a reasonable level. That reasonable level, of course, was the trend line and the top of the range, the confluence area here. So I'm hoping that you actually got out of that. That would be good. And now we look to focus on a big retracement. I hope I said that yesterday. I'm not sure I did, but I hope I did. Now, this really needs, in my humble opinion, to come down to at least this level here, maybe this level here, which would give you, of course, a clear, very clear left shoulder, head, right shoulder, which is what we were looking for in the first place. So that was a very much, and I hope I made that clear, very much a short-term trade. And you're looking to take a little bit out of the market, which is what our 30-minute, 1 hour time frames are looking for. So that was just a classic slingshot chart pattern that emerged there at a really nice place. So take a photo of that one if you don't know the slingshot patterns. That one's pretty much straight out of the book that I will write one day. You could have entered there. You could have entered there. Either one would have been acceptable. Nothing to do here until we get a lower high, of course. We're now looking for price to come back and retest the daily pivot and give us a lower high. But you guys who have been here for a while will know the way I trade. I don't trade bearish bars short. I trade bullish, but well, not necessarily bullish, but they've got to have a white body for me to trade short. Interestingly, you can trade that both ways because there's a pullback, but that's what I'd be looking for up here as well to trade short, unless it is on a trade line such as this, and that may well be the case. So you can see that bar sitting there. If that was a white body like that one was, then that becomes tradable. And well, look what happened. So I'm looking for that again, basically off that resistance area. Now, new order this morning, and we spoke about Euro Kiwi and Euro Aussie yesterday, right? And I was comparing the two and suggesting that the Aussie would be stronger based on what I saw. And what I saw was, let's go up a time frame to the weekly chart. And you can see that big rejection off the bottom of our channel, our ascending channel, right? So big rejection bar there, white candle. So not in my area of expertise to trade, but when you see that in this context where you've got 2 big bull bars, which created that low test bar, of course, we went straight into consolidation. And then we smashed through that consolidation after quite some time, 3 weeks of consolidation, one little false break there. And then we smashed through it, absolutely hammered it. And that to me was a signal that the euro was stronger than the Kiwi at that point in time. Now, of course, things change, but I don't think that is the case right now. I still think that is pertinent. That is dominant in my mind. These two bars here, which created a higher high, then we got a higher low, and then we smashed it. And now potentially we've got another higher low sitting there with a black body, interestingly enough. So that's kind of up my alley. We didn't get a buying bar to retest the broken trade line, so that doesn't become a tradable false break for me. It may well turn out to be, and we may finish up down here somewhere, and even go on to lower lows. But this would be the first opportunity in my book to trade this long, and that's why we are at this point. So we need to go in here with the view in mind that perhaps we're going lower, maybe to the monthly pivot, maybe even, back into this range. I don't know. I can't answer that question. What I can say is this will be the first opportunity to play this higher high, higher low scenario. So reversal is what I'm saying. So that's the candle that we are trading. And if you want to follow that one, it is entering the market at 1.6823. We're not there yet. The stop loss is at 1.6729, and I'll take my first profit at 1.6870, which is just a little bit higher than there. Now, in terms of second take profit, you could take a second profit here if you wanted. I may well do that, but I don't believe it's the wisest thing to do because I think we need our stop loss below the weekly pivot. Daily pivot will change. The monthly pivot's not going to help us because that hasn't been tested in some time, but that's going to change, right? That won't be there tomorrow. So that's going to move up, and we may have that as protection as well. So I wouldn't move my stop loss at that point. If you want to take a little bit off, then fine. That's reasonable, a reasonable thing to do. But the big play here is to play to the top of the range, right? And because we've got a 94 pip stop loss, if this was to go to the top of the range, for the sake of 90 odd pips, we could get a couple of thousand. Now, I'm not saying that's going to happen, but chart patterns are wonderful things. And if you think right now, on the 31st of March 2021, that Euro Kiwi can't go here because the Kiwi's got to be stronger over time because it's handled COVID better, et cetera, et cetera, et cetera. That's not going to mean anything at Christmas time if Kiwis have an outbreak of COVID or whatever. There's a whole bunch of things can happen in that time. So that's why I like to take advantage of those particular scenarios when we get that opportunity. It may not play out, but for a very, very small risk, we can get a reasonable reward. So that's why that trade is important at the moment. As I say, it may not be the right entry. If it's not, hopefully we don't get an entry until we get down to here and get another one of those bars, and we try again. And if that doesn't work, we'll try it down here and until it goes. Very similar to what Ash is talking about on gold. I just hope we don't get taken into the trade that does go down here. It's as simple as that. So that's Euro Kiwi. You could have done exactly the same thing on Euro Aussie. My reckoning as to why I didn't do that was because we'd be entering the market here and we've got a white-bodied bar to start with. I don't like them. So we'd be entering the market here where our stop loss would be here. So the immediate reward available to us to weekly pivot is really poor. And for that reason, I chose Euro Kiwi over Euro Aussie, apart from the fact that when we compared this yesterday or on Sunday, I compared this, Euro Aussie was unable to take out the highs of this big rally, whereas Euro Kiwi had no problem at all in taking out the highs of that rally, suggesting to me that we're now going into a higher, high, higher, low sequence, which AKA a reversal. So I hope that one's reasonably clear to you, and that's the reason why we're taking Euro Kiwi at the moment. Dollar CAD, we've been through that one. We're waiting for now a second opportunity to trade this, not long but short now, but that will be short term because I believe that we're going to get an opportunity down here somewhere to trade this long, but it's not now, definitely not now. We'll just wait on that one. If it does set up for the short, I'll take the short. What else do we have coming into the week? Aussie dollar. We traded Aussie dollar yesterday as well. And what did we trade this on, a 4-hour chart? Yep. So we traded this bar here. Is exactly what I've been talking about. When you've got a high test bar that's got a white body and it's in context, the context here being that if you have a look at the daily chart, we've got lower lows, lower highs, lower lows. This was a pretty quick one, if you like, but the main reason for taking this position, and we already took a short on this earlier, if you'll recall, we took a short on this last week trading this bar here. And my comment at the time was the far better way to trade this was as a retest of that trade line, which indeed is a neckline on the head and shoulders, in my opinion. We now got the retest yesterday, and we got a friendly candle with this one here. As I said, white body, high test bar, bang on that trade line or that trend line, whatever it was, neckline. It was just a fait accompli that we have to trade that. You've got to go short here, and you've got to put your stop loss there. We are trading this safe at the moment. We've taken our first take profit. Second take profit, if you are in this trade, look, I wouldn't worry about it for now, because we're either going through this low or we're not. And if we don't go through this low, so be it, will be taken. Our trailing stop will be taken. So I'm not concerned about a TP2. If this does reverse, as it looks possible to do, look at what we've got potentially available to us here. First instance, I believe, would be either there or there. And of course, I've got a preference for that level there, 70.30. That's 600 pips away. And we risked what? 42. That's a reasonable return. So although we've taken some of that off the table, I don't want to take any more off the table. I want to leave that available to us and see if we can actually get down to that level there on Aussie US dollar, because that's going to be a reasonable trade for us. I would definitely be looking to scale out of most of it there and trail very, very tightly on my stops, because I'll expect a bounce there at that point. And whether or not this can reverse, I don't know. It depends a lot on what happens with COVID, with the US dollar, with also interest rates, all sorts of things can come into that equation. Just like I said with Euro Kiwi, your fundamental analysis would tell you that this has got no chance of going back to here. Absolutely Buckley's. But the technical scenario tells me something completely different. Of course we can go back to here. And if we can, we're going to make a decent profit. And that's why we take these positions. So that is very much a case of where I'm at. Did we take anything else yesterday? Yes, we did. We took pound Kiwi, and we suggested, what did we take this on? 4-hour chart? Yep, 4-hour chart. So same thing going in the opposite direction, right? We've got a low test bar with a black body, and we've got reason to think that this support level here, bottom of that previous range, and I'm going to say weekly pivot, but we didn't quite get there. But don't forget that we've been in this trade for the whole month of March, and this was really an add point to me, or a scale in point. But unfortunately, well, not so much unfortunately, we did hit TP1, which means we traded it for free, but we didn't get much of a ride on it, because what actually did happen is, do we have a trade line coming through there? I think we did. I can't remember where it was though. Doesn't really matter. I thought we did, but I can't see one there. Anyway, we had a reason to think that we would go to the daily pivot, which of course was where our first take profit level was. But as soon as we did, we repelled off that and pretty quickly. Interesting. Now I can't trade this now. It's in a position where it's just okay. Maybe short, maybe long. I really don't know. And until it becomes clear to me what's going on here, I just can't trade it. So if I get another opportunity with one of these bars, maybe down here again on the weekly pivot, I could look at that. But Lewis also had an opinion yesterday that we were going short here, and I can totally get with that. What I can't get with is getting short until I get below the weekly pivot. So this, to me, is still a potential bounce point. We might stay up here for ages before we go either way, but hopefully, and in the bigger scheme of things, we're headed for here, right? It's got to get a motor on, because I nominated this level how many months ago? I don't know how many months ago, but if it's going to get there, it better get its skates on, because it hasn't got that long to do it. We shall see. The destination is the bottom of the channel for which one, Lewis? Sorry, mate. ST. Short term, which, yeah, pound Kiwi? Yep, pound Kiwi. Look, no, not until I'm below the weekly pivot, because I still see this really strong opportunity on the bigger picture. The bigger picture being, remember we spoke about that tweezer bottom a couple of months ago. That was a pretty strong signal to me that we're going long. So until we get below that weekly pivot, I'm still of the opinion that the major trend will take us where we need to go. But you're completely right with your analysis. We've got a double top sitting there, and we're at the top of the channel, and the target would be here, no question. Agree with that 100%, 194.35. And if I get that opportunity, I'll probably trade that myself. But at this point in time, I'm still going with the bigger picture, and the bigger picture is telling me until we get below that pivot, which now, of course, will change. And we'll come back next week, and who knows. But totally get where you're coming from, mate. And you're spot on. Your analysis is 100% correct. I've just got the bigger picture in mind at the moment. But yeah, I'll be jumping on it if it's there. Don't worry. So, mate, I think I'm there. I think I'm done. Oh, that's interesting as well. I'm not trading it, but yeah, it's interesting. I can see the potential for the pound to go to weekly pivot here now. Hang on, let me have a closer look at that. I better not dismiss it out of hand. Let me get rid of that, because it's not really a channel. It was just something I was looking at. Let me have a look at the 30-minute chart. Yeah, it's decent. I'll show you what's the cogs that are going around in my head, guys. So we've got here a break of that resistance trend line, trade line I call them, and a retest of that, which came back to the daily pivot. We've got the weekly pivot a wee bit ahead. Let me get rid of those TP1 areas. And we've got a new high of the day. So we're not trading into the high of the day. We've got a new high of the day, completely different scenario. We would have to risk 21 pips to get our first take profit level at 17. That's pretty good. And I just need to reconcile whether I'm willing to go long this. It's not crystal clear. That's a little bit of a range that looks evident to me as well. And there is the top of it. Yeah, you're asking it to do a bit. Higher, higher, low. It was probably worth 0.25%, guys. Let's place the order. We'll go in with 0.25% risk. This has got nothing to do with the breakout, mind you. This is trading a setup, nothing more. And the buy will be at 137.60. Stop loss will now have to be underneath the current bar, which is 137.38. There we go. And your first take profit, well, you've got to be underneath the weekly pivot. So I'll give you the DR1 level, which is 137.76. 1.3776. Now, I didn't write those down. Silly me. Pound US dollar. TP1, 137.76. And the other levels were, I've still got that buy order in the market, by the way, which is exactly the same level. Wow. That's amazing. All right, I'll leave that. I've already placed the order. Am I mad? Yep, I'm mad. I'm going nuts. Sorry, guys, I've already placed the order. So the level was 1.3760. I hope that's right. And it's not giving me a fib. And the stop loss is at 1.3738. Let me just check that one more time. Yep, 1.3760 and 1.37. Got a memory like a sharp tack, haven't I? 38. Righto, that's pound US dollar, and that is a new trade, a new order. And let's see how that goes. Now, if you get TP1 here, don't forget we're trading this on a small time frame. We only want a little bit out of the market. I don't think I'd want to go much beyond DR2. So that's my target area, right? My target is, actually it's a little bit below there. There's my target there. 138.10, let's call it, right? That'll be where I get out, all out at 1.3810. Okay. And the difference between trading on 4-hour charts and daily charts is exactly that. There's no point in going through that level. Why? Well, I've said it a million times before, haven't I? For those of you who haven't seen that exercise with how many times intraday price goes outside of DR1 and DR2 and DR3, you'll know why I'm saying that. So I want to be out there, all out. Don't care what happens after that. Righto, mate. That's me. I'm done.
Great stuff. Okay, mate. Well, one more day before the bank holiday, and we will be off on Monday.
Microphone down.
Oh, sorry, guys. Yeah, we got one more day before the bank holiday. We're going to be off on Monday, but we will have we will be with you tomorrow, and obviously again next Tuesday. I like the look of this trade, mate. I might put this order in myself.
Like the pound?
Yeah. Yeah, I like that. I like what you're seeing. And actually, I quite like the pound at the minute because we've had some decent GDP numbers today, better than expected. So I think the pound's got a pretty good shot at going to that weekly pivot as well. So I might well join you with this one.
We need a bit of volume in the market, I think, to push it.
That's the thing. There's very little liquidity, isn't there? But it could drift up there. And yeah, if it breaks that level and you're looking for it to break that high, that would look pretty good to me too. So yeah, I'm gonna probably set that order as well. I'm gonna watch that one.
All right, bud. Happy days. Let's
first ever slingshot,
shall we?
Yeah.
That's a dead set slingshot. That one.
Yeah.
Straight out of the manual. One day I'll write it.
Bitcoin, after we looked at it earlier on, is dropping from its highs, down already around about looks like 5% from the highs. Is that right? Bit of a swing to the downside anyway. So yeah, interesting one. Bitcoin down at 45. Come on, give me that. I will see you all tomorrow. Thanks very much, mate. Thanks, Angel, as always, and thanks, guys in the room. We will see you tomorrow.
One more thing, just one
Yeah.
more. I said I'd go through
All
euro
right,
dollar.
Columbo.
I said I'd give you my opinion on euro dollar every day,
Yeah.
and here's my opinion. My opinion is still the same.
Yep.
I'm just waiting for it to come back inside that range now, but that's not crucial because that's a cloud of a price rather than a price. So what I'm waiting for is a break or a false break of support. And currently I don't have any support here. I've got a big bullish engulfing bar, but the only support level I've got, actually I do have some support here, is on the smaller time frames. And there it is there. So now that we've got a break of, sorry, we've breached the daily pivot, we haven't got a break above it. If we came back and retested this trade line now, I'd be happy to place an order long above that.
It's an interesting one, mate. The euro, the numbers. I had a good look through the numbers yesterday. Oh, actually, yeah, but a couple of things. Good look through the numbers yesterday, and they're okay. But they've now advised in Germany not to roll out the AstraZeneca vaccine to anybody under 60, and the pandemic is just causing it a problem. I mean, it's very difficult to kind of have any confidence about the European economy, because the coronavirus really is affecting that area probably more than most, or more than the majors. So I'm finding it difficult with the euro. I will leave you with a funny story I heard. It won't be funny for many investors. Volkswagen yesterday.
Lewis's question. Sorry, but yes, tell me.
So Volkswagen yesterday released a statement that they are going to be launching Volkswagen in America, and they're going to change the Z to a T, so you had volts, and it's for their electric car. So they're launching electrification cars in America, and then the price bumped up around about 5.5%, and they've come out to say today that it was an April Fool's joke. So anybody now holding Volkswagen on the back of that story is going to be spitting feathers, I imagine.
Well, wouldn't mind owning the domain name. I'll bet you can't get that right now.
No, you probably can't actually.
It's a good marketing strategy. I like it.
Yeah, it really is. I think it's. It's a great name if they do ever launch it. It's a great way to kind of play on it.
Don't think that won't happen. That's going to happen for sure.
Yeah,
that's the beauty. Lewis, sorry, mate, was that done?
No, that was done. I was going to check the price now. In fact, I will. I'll quickly tell you what the price of Volkswagen today. Oh gosh, my charts are slow. When it comes up, I'll let you know. I'll let you know if they've dipped or not. But yeah, Jokeswagen. Yeah, exactly. Oh, here we go. They're down. They're down marginally actually. So maybe people aren't that upset with it.
Okay, here's the thing, Lewis. I have absolutely no doubt that the US dollar is really strong at the moment, and I think it's going to 94. I agree with Ash and his analysis earlier, but that doesn't mean intraday that we can't see euro dollar go to there, and that's precisely what I'd be banking on. If I can get in here as a retest of this on, let's say, a 10, 12 pip risk, something like that, and pick up 20 or 30 pips, that's exactly how I trade the 30-minute and 1 hour charts. Don't care what happens after that because I'm out, right?
Yeah, your time frames are so different to most other people that I think it's easy to get kind of misguided by thinking that
it is
you're trading completely against what the fundamental aspect of the market is suggesting, because actually the fundamentals don't really matter most often for you, do they? It won't really affect your trade massively.
Here's what matters to me. If this does come back and retrace here and not go below it, then the next thing we're going to hit, to my mind, is this level here. So if I can pick that up in a 12, 15 pip risk to get 30 or 40, then happy days. That's all that counts.
Yeah.
And
makes
then I'm out,
sense.
and I don't care what happens after that. In fact, I'm more likely to trade it short than not. So 30-minute and 1 hour is really, I won't say doesn't regard trend or doesn't regard bias or doesn't regard fundamentals, because there is a little bit of that in there. But yes, I'm expecting the dollar to rally, but it's rallied for the last 2 or 3 days. Why isn't it going to have a little rest right now for 20 or 30 pips? That's kind of what goes on in my head. And I
Yeah.
know it's scrambled eggs sometimes, Lewis, but it makes sense to me, you know.
Yeah. Yeah. Okay, mate. Well, let's wrap it up, and we will be back as we said tomorrow. So have a great rest of the day, guys. Stay safe because it's going to be quite tricky to take anything short term. I would have thought today because it's just a complete lack of liquidity going through the market.
Indeed. Angel, thank you for the week. Thank you for the month. And you have a wonderful holiday. I know you're not with us tomorrow. We will catch you next week, Tuesday, I gather, when we'll rejoin everything. And if you could let me know if there will be a sub in tomorrow, that would be fantastic. Otherwise, have a good one.